Natural gas futures remain under pressure for a fourth consecutive session on Tuesday, with the January contract slicing through the key $4 support level and sliding to an early low near $3.85. The decline extends a sell-off that has been building momentum since last week, fueled by increasingly bearish weather trends, aggressive long liquidation, and persistently record-high production. The dominant headwind remains the weather. Updated forecasts show the 11 to 15-day outlook deteriorating sharply, erasing a large chunk of previously anticipated heating degree days. After a brief cold shot through Monday, above-normal temperatures are expected to blanket most of the lower 48 for the remainder of the week, effectively capping any chance of sustained heating demand. As a result, traders have been aggressively unwinding long positions, with confidence in a durable cold pattern steadily fading. Even last weekend's modestly cooler tweak to the December 17th to 27th window failed to provide support. The market quickly recognized it as insufficient and, crucially, too late to defend the downside. Once October's $3.93 low gave way, the technical door opened to further weakness, and price action followed suit. On the supply front, production remains uncomfortably elevated. Monday's dry gas output surged to 113.1 billion cubic feet per day, nearly 9% higher than a year ago, placing the burden squarely on demand to absorb the excess, and so far, it hasn't. Although early week demand was estimated at 125.5 billion cubic feet per day, that strength was largely a carryover from residual cold and is unlikely to persist as temperatures moderate. LNG flows offer little relief. Net feed gas deliveries to U.S. export terminals averaged 16.8 billion cubic feet per day, down 5.4% week over week, while global LNG prices have eased from recent peaks, dulling the incentive for incremental U.S. exports. For now, the market is clearly not pricing in an export-driven rescue. Let's frame the winter price outlook in a more analytical way. On the front-month chart, the implied integral or equilibrium price for January futures sits near $4.70, with observed deviations of roughly 60 cents on the upside and minus 77 cents on the downside. For this extrapolation, we will use February and March futures baseline levels near $3.63 and $3.25, respectively. Using this framework, we can outline a reasonable winter trading range, with upper and lower bounds defined by potential colder than normal or warmer than normal weather deviations. These extrapolated limits, as illustrated in the chart, help quantify where prices may gravitate under shifting weather scenarios rather than relying on a single-point forecast. Nevertheless, it is important to keep in mind that this type of scientific approach does not always work in the natural gas market. Nat gas is a highly speculative asset, where price action is often driven as much by positioning, sentiment, and sudden weather model shifts as by underlying fundamentals or statistical frameworks. As a result, deviations can overshoot or undershoot what any model might reasonably imply. For that reason, this analysis should be viewed as a guiding framework rather than a definitive forecast. Be critical of the assumptions, monitor incoming data closely, and always do your own research before drawing conclusions or making decisions. Unless colder trends emerge in the next few model runs, the market remains under pressure. The break below $3.90 confirms that sellers are in control, with little evidence of buyers stepping up. In the short term, the setup is clearly bearish: ample supply and a lack of cold. Any bullish push will likely require a weather surprise. Until then, the downside pressure persists. That said, the front-month chart looks set to test that gap and push toward the 200-day MA near $3.60. As I mentioned before, filling this gap was a possibility, and now it looks like it might actually happen. It'll be interesting to watch how this unfolds. If you enjoyed the video, drop a comment, hit like and consider supporting the channel. It really helps keep things moving, and see you next time.